Hi, my name is Nick Nassad, and welcome to another edition of CMS Forex News. Today is Monday, June 16th. New Zealand's first quarter manufacturing sales figures came in 3.7% higher than the previous quarter, the third largest rise since the series began. This comes after the record increase in the December quarter of 8.3%. Much like the previous quarter, meat and dairy products manufacturing skewed the numbers, though that industry grew 13%. Stripping this industry out, sales edged down 0.1%. The New Zealand dollar lost ground following the manufacturing data. Although it was not close to being a poor report, it does indicate that manufacturing might have peaked. After losing about 30 pips, the Kiwi dollar pair rallied due to weakness in the greenback and returned to the 0.7530 level, which was above the session open. The Bank of England released its quarterly inflation report Sunday. It noted the household perception of inflation has not been forward-looking and instead has been based on perceptions of current inflation. This is adding fuel to the public's inflation expectations. The heightening level of concern toward inflation opened the way for sterling strength overnight. Coming after last week's producer inflation data, the market sees the Bank of England possibly raising rates. The pound gained on the dollar following the report, but dollar weakness was pervasive because the G8 meeting failed to mention currency implications, specifically on greenback's recent recovery. Swiss retail sales in April were 9.4% lower compared to last year, dragged down by declines in shoes and clothing. The headline number was skewed also because of Easter being in March this year. Still, the implication is that higher inflation and a global slowdown are cutting into consumption. Eurozone's April inflation was higher than expected, and the 3.7% headline number is worrisome for the ECB and is exactly what policy members feared. The bank may be compelled to increase rates in its next interest rate meeting in July. The euro stopped its losses against the sterling after the Eurozone inflation data, but is still down since the start of the trading week. The central banks have been quite similar in their stance, and inflation has been a common theme as well. After a 50-pip drop, the euro-pound pair rallied about 20 pips to settle around 0.7880 by 1:50 p.m. Eastern. The G8 nations had a chance to talk about the development of global currencies in their meeting in Japan. Dollar bulls anticipated talk for dollar strength to back up U.S. Treasury Secretary Paulson's stance. Paulson said last week that he would consider government intervention to revive the greenback. The dollar gained ahead and during the G8 meeting, but once the meeting concluded without mentioning currency developments, the greenback lost steam. Overnight, it gave up 50 pips to hit an intraday low of 107.90, then recovered somewhat during the New York session to 108.20 by 2 p.m. Eastern. In the U.S., the June Empire State Manufacturing Survey fell 5 points to negative 8.7, worse than economists had expected. New orders, unfilled orders, and shipments all fell further into negative territory, and prices kept surging. The prices received component was notably higher, which indicates that manufacturers are passing on their increasing prices to their customers. Also in the U.S., the headline long-term TIC flows increased to $115 billion in April. The Treasury International Capital Report showed that in April, foreigners bought a net $60.6 billion in U.S. equities. After Bear Stearns' collapse, this is a welcoming sign for Wall Street as it shows confidence in the equities market, though there was an increasing pickup in the buying of safer treasuries. Oil prices rose $4 today and made a fresh record high above $139 per barrel. The US dollar-Canadian dollar pair, which has been more sensitive to poor Canadian fundamentals recently rather than oil prices, fell in favor of the loonie. From its open, the pair was down about 100 pips, finding support near 1.02. For tomorrow's session, Switzerland will release industrial production data, UK releases consumer price index and its retail price index, and those will be crucial following the elevated PPI last week. Germany and the Eurozone will follow that with their ZEW economic sentiment numbers. The Eurozone also will post trade balance data. In the North American session, Canada will release numbers on international flows. The US will then post housing starts, building permits, its PPI, current account, capacity utilization rate, and its industrial production data. This will probably set the tone for the greenback as it looks for another week of rally. And that wraps up today's news in the Forex market. Join us again tomorrow right here at cmsfx.com, and happy trading.